Hello and welcome to this edition of the Bitcoin News Update, created by Augustcool Research. I'm Rachel. For more from us, check us out on Twitter. We maintain some great lists for the best Bitcoin, crypto, and investing content on Twitter, and we post a lot of our work on Substack. See the show notes below for links. And please subscribe to our YouTube channel to catch the latest content, where we create reports like this about the latest Bitcoin news, as well as technical analysis, investment market analysis, and deep dives into specific tokens and technologies. We'll dive right in with some of the key findings from the BitGet Q3 2025 Global Crypto Investor Survey. Investor confidence remains highly resilient. Despite macro headwinds, the survey reveals a remarkably strong global confidence in the cryptocurrency market, with optimism significantly outweighing caution. A substantial 66% of participants across all regions indicated plans to increase their crypto allocations over the subsequent 6 months. This forward-looking sentiment is particularly pronounced among experienced investors, those with 5 or more years in the market, with 52% intending to add positions. The findings suggest that the investor base is maturing beyond merely chasing short-term bull runs, instead viewing digital assets as a foundational tool for long-term wealth management and financial autonomy. This sustained appetite for increasing exposure, even amidst global economic uncertainty, highlights the market's perceived durability and increasing acceptance as a legitimate asset class. A significant portion of the global investor base maintains a highly bullish outlook on Bitcoin, BTC, reaching new all-time highs in the next bull cycle. Nearly half of the respondents, 49%, anticipate BTC peaking in the range of $150,000 to $200,000. Interestingly, a clear divergence exists based on experience. Long-term veterans expressed even more ambitious projections, with close to 7% believing Bitcoin could surpass $250,000. Conversely, newer entrants to the market tend to be more conservative in their estimations, with a higher proportion predicting a peak below $150,000. Nevertheless, Bitcoin remains firmly established as the portfolio anchor, universally viewed as the most stable and likely candidate for outsized returns, reinforcing its status as the blue-chip asset of the crypto economy. The geographical distribution of investment appetite clearly shows that emerging markets are the primary engine for accelerating global crypto adoption. Countries like Nigeria, China, and India lead by a significant margin in the percentage of investors planning to increase their allocations, dramatically outpacing the global average. This trend suggests that in these regions, cryptocurrency is increasingly tied to practical financial needs, such as hedging against local inflation and accessing financial inclusion tools. In sharp contrast, developed markets, including Germany, France, and Japan, exhibit more cautious behavior with below-average plans for increased investment. This highlights a regulatory and maturity disparity, with emerging economies demonstrating a retail-driven enthusiasm that is currently dictating the pace of new capital inflows. From September 1st to mid-October was one of renewed institutional enthusiasm for U.S. spot Bitcoin exchange-traded funds. Following a period of volatility and correction in mid to late September, the funds experienced a powerful surge of capital injection throughout October, ultimately driving the total net assets under management, AUM, to new highs. The surging total value traded also confirms deepening market liquidity, with daily volumes frequently exceeding $5 billion and peaking at $9.78 billion on October 10th. Leading funds continued to capture the bulk of the market share. BlackRock's iShares Bitcoin Trust cemented its dominance, surpassing the 800,000 BTC holdings milestone and approaching $100 billion in assets. Fidelity's Wise Origin Bitcoin Fund also maintained strong, consistent inflows. Some investors view Bitcoin ETFs as a hedge against rising global uncertainty, including geopolitical tensions and turbulence in traditional markets. The expectation of further accommodative monetary policy from the U.S. Federal Reserve, with anticipated interest rate cuts, has boosted confidence in risk-on assets like Bitcoin. Brazilian cryptocurrency firm Orange BTC to begin trading on the local stock exchange, the second such company in Brazil to hold Bitcoin on their balance sheet. Orange BTC attracted the backing of some well-known international investors, including Mexican entrepreneur Ricardo Salinas, the owner of Banco Azteca. Other backers include Gemini co-founders Cameron and Tyler Winklevoss, crypto brokerage Falcon X, and Adam Back. Hammock Strategy offers investors dual exposure to gold and Bitcoin through its publicly listed company structure. The company's gold exploration strategy centers on the Nimba license in northwest Liberia, a prospective but underexplored region within the Archean-aged Greenstone Belt. Hammock has implemented a pioneering Bitcoin Treasury strategy, making it one of the first UK main market-listed companies to allocate digital assets within its corporate framework. This dynamic reserve model is managed in partnership with FCA-regulated ARCAX. The goal of the Bitcoin Treasury is to enhance long-term capital resilience and offer institutional investors exposure to digital value growth while operating under strict financial governance. This combined approach provides a future-facing model for wealth creation, blending proven commodities with emerging financial innovation under a single listed vehicle. UK-listed Bitcoin Treasury Company, BHODL, announced the acquisition of its first 100 BTC for approximately $11.3 million. The purchase immediately places BHODL in the top 100 public Bitcoin Treasury companies. The Bitcoin was acquired at an average purchase price of $113,227. We have not seen many major Bitcoin purchases by Treasury companies in the last 6 weeks, likely due to the higher prices we've seen. While Strategy and Mara have purchased Bitcoin, many of the other largest holders have paused their purchases after an aggressive summer of financing Bitcoin purchases through capital raises and debt. Luxembourg is officially joining the ranks of governments investing in Bitcoin. The country's intergenerational sovereign wealth fund will allocate 1% of its total portfolio, over €7 million, to Bitcoin and other crypto, Finance Minister Gilles Roth announced during his 2026 budget presentation in the Chamber of Deputies. The move positions Luxembourg as the first Eurozone nation to allocate sovereign wealth into Bitcoin exchange-traded funds, marking a significant symbolic step for Europe's financial landscape. The amount of Bitcoin held by the U.S. government passed $36 billion after a record-breaking forfeiture of 127,271 BTC, roughly $14 billion. The forfeiture came as the U.S. indicted former Chinese national Chen Zhi with grand jury charges related to crypto investment scams that have resulted in the loss of billions of dollars, according to a court filing. The complaint is the largest forfeiture action in the history of the Department of Justice. U.S. authorities also said on Tuesday they had charged Chen Zhi, who renounced his Chinese citizenship, with orchestrating a Cambodia-based crypto scam network that has used forced labor to steal billions of dollars, according to a release published Tuesday. A new GOP bill aims to codify Trump's executive order on crypto and private equity in 401k retirement plans. On October 14th, Republican Representative Troy Downing introduced a draft bill in the House Financial Services Committee that would give Trump's executive order the force of law. Trump's executive order on retirement assets says the Department of Labor, the Securities and Exchange Commission, SEC, and the Treasury Secretary must review and prioritize the guidance for 401k plans within 6 months. The bill, if passed, would codify Trump's executive order allowing retirement plans to include alternative assets, including cryptocurrencies. On October 8th, the UK's Financial Conduct Authority formally lifted its ban on the offering of crypto asset exchange-traded notes to retail investors. This change allows regulated UK investment exchanges to offer Bitcoin-related ETFs to retail investors for the first time since the ban was imposed in 2021 and is part of a broader UK push for digital asset innovation. The government also announced tax changes allowing crypto asset exchange-traded notes to be held in tax-free savings and pension schemes. On September 30th, the New York Department of Financial Services updated guidance for financial institutions that custody virtual currency, emphasizing strict rules for segregation and separate accounting of customer assets to protect them in case of insolvency. These regulations are aimed at enhancing consumer protection and establishing clear custodial standards for institutions handling assets like Bitcoin. And what could arguably be the most impactful U.S. development for Bitcoin market access in the last few months, on September 17th, the U.S. Securities and Exchange Commission approved new generic listing standards for commodity-based ETFs, including those backed by crypto assets like Bitcoin. This move effectively removes a major historical regulatory hurdle that the SEC used to block the listing of many spot crypto ETFs. It streamlines the approval process, meaning exchanges can now list new crypto ETFs, like more Bitcoin ETFs, without needing individual rule change applications for each product, which could lead to a flood of new crypto ETFs in the short term. Japanese regulators are preparing to introduce regulations that would explicitly prohibit trading based on non-public information, Nikkei reported. Currently, the country's Financial Instruments and Exchange Act doesn't cover cryptocurrencies when it comes to insider trading. Bridge, the stablecoin infrastructure company acquired by fintech giant Stripe, is applying for a national bank trust charter through the U.S. Office of the Comptroller of the Currency, one of the major federal banking regulators. If approved, Bridge would be able to operate under a unified federal framework, consistent with the Genius Act, the stablecoin legislation signed into law this summer. In particular, Bridge would be able to provide regulated stablecoin issuance, management, and custody services. Stripe has moved quickly to develop its stablecoin unit, including by incorporating stablecoins into its core business, since its blockbuster $1.1 billion acquisition of Bridge last year. In June, Stripe partnered with Coinbase and Shopify to make it easier for merchants to accept payments made in Circle's USDC stablecoin. Months later, the company unveiled its open issuance platform to assist companies in launching bespoke stablecoins using Bridge's infrastructure, while a planned Layer 1 blockchain, Tempo, will be optimized for payments. JP Morgan is preparing to expand its exposure to blockchain and digital assets, with plans to offer cryptocurrency trading services in the near future, according to Scott Lucas, the bank's global head of markets and digital assets. The shift comes amid a noticeable change in tone from CEO Jamie Dimon, who previously dismissed crypto as worthless. In August, Dimon said he had become a believer in stablecoins and acknowledged blockchain's long-term potential for improving global finance. Lucas also noted that JP Morgan doesn't view Ethereum or any single network as the inevitable winner of blockchain adoption. Instead, he predicted a multi-chain future where various Layer 1 and Layer 2 networks coexist and offer distinct advantages. Coinbase announced it is making an investment in CoinDCX crypto exchange to expand its presence in India and the Middle East. Coinbase previously invested in CoinDCX via Coinbase Ventures, participating in multiple funding rounds since 2020. The financial terms of the investment were not disclosed, while CoinDCX co-founder and CEO Sumit Gupta said that the transaction values the exchange at $2.45 billion. The deal remains subject to regulatory approval for closure. Founded in 2018, CoinDCX has over 20.4 million users and $165 billion annualized transaction volumes across its products as of July, according to the release. It also has over $1.2 billion worth of assets under custody and an annualized revenue of $141 million. In July, CoinDCX suffered a $44 million exploit where hackers disguised as recruiters lured one of its software engineers to install malware on his company laptop. Almost 1 year after the fintech giant Stripe struck a $1.1 billion deal to acquire the stablecoin startup Bridge, two other big corporate players want to scoop up a stablecoin firm of their own. The U.S. crypto exchange, Coinbase, and the payments giant MasterCard have each held advanced acquisition talks to buy London-based BVNK, according to 6 sources familiar with the dealings, who asked for anonymity to talk about confidential business discussions. The terms and winning bidder haven't been finalized, but the sale price is in the range of $1.5 billion to $2.5 billion, according to some of the sources. The talks may not result in a final deal, but at present, Coinbase appears to have the inside track over MasterCard, 3 of the sources told Fortune magazine. Soulmate Infrastructure said Tuesday it directly purchased $50 million worth of Solana from the Solana Foundation at a 15% discount, deepening its push to build Solana-focused infrastructure in the United Arab Emirates. At the same time, Cathie Wood's ARK Invest disclosed an approximately 11.5% ownership stake in Soulmate, according to a statement. The deal was struck during last weekend's market turmoil and will be used to power Soulmate's bare metal infrastructure in the UAE under the Foundation's Solana by Design program. As part of the agreement, the Solana Foundation obtained rights to nominate up to 2 directors to Soulmate's board, the company said. Circle's USDC could become a key infrastructure layer for global payments, with William Blair analysts highlighting upcoming products like ARK and the Circle Payments Network as long-term revenue drivers. The view aligns with Bernstein's projection that regulated stablecoins will dominate the next growth cycle, with USDC supply expected to nearly triple to $220 billion by 2027. Analysts at William Blair are betting that stablecoins are entering their commercial era, launching coverage of Circle Internet Group at a rating of outperform. In its initiation report, the firm described Circle as the most important participant in a stablecoin ecosystem poised to transform cross-border finance. Blair analysts said USDC is positioned to supplant fiat currency for cross-border commerce, as regulatory clarity and new infrastructure unlock demand for instant, low-cost digital settlement. Circle's revenue today relies mostly on interest from USDC reserves, but the firm said upcoming products such as ARK, a blockchain purpose-built for stablecoin finance, and the Circle Payments Network could power tens of billions in transaction revenue as adoption scales. Blair's thesis aligns with a new note from Bernstein, which projects that USDC supply will nearly triple by the end of 2027 to about $220 billion, capturing roughly 1/3 of the global stablecoin market. Thanks for watching. We'll be back again soon with more Bitcoin and crypto news. If you enjoyed this video, please give us a like, and please subscribe to catch future content.